Oil prices are on the rise. A big bull run recovery from the black gold oil at the moment, right? Remember, if we refer to the start of this year, from the commence, oil prices had been hammered, absolutely slammed. One of the main reasons for that, well, a couple of key reasons. One is obviously coronavirus. Remember, China, a huge consumer and importer of the black gold. So if you're going to be removing a large part of demand from the market, naturally, of course, prices are going to come down. And then also we had fear, as I said, of a fear of too much supply in the market, not enough demand. So those sort of couple of things really weighed in hard and heavy on the oil market. Now, since we've started to actually see a stabilization and the foundations have been laid for a decent recovery, we continue to push to the upside, as I'm sure you can see from your charts, right? There's a few reasons for that, which I'm just going to briefly bullet point. I mean, you can read sort of more detail in the description or in the actual blog of this post. Now, the first reason is we are seeing improving signs that the rate of the number of new cases of the Chinese coronavirus that has been spreading across the globe dropping substantially. Okay. Additionally, we've seen the United States actually issuing fresh sanctions on a large oil company in Russia, Rosneft, a subsidiary of them that was doing business with one of Venezuela's oil companies, and it's effectively that sanction is now going to be reducing some more supply from Venezuela and of course from the broader oil markets. Right? Remember, a reduction in supply of oil means prices rise. If we're reducing supply, prices will rise. Okay, less supply, prices rise. So just to clarify that. So that's been helping the oil market. In addition, now there've been massive instability with Libya since January, actually, since the start of this year, politically, right? Politically, it's a massive geopolitical concern at the moment. It's keeping oil prices propped up as well. So essentially, there's this ongoing feud with the government leader and this government leader's rival, right? And the government leader's rival, his loyalists or groups of loyalists, essentially have put a blockade, on the country's oil ports, oil fields, so on and so forth. So a massive amount of supply of oil from Libya, and bear in mind, Libya are a huge oil producing nation. The fact that blockade has been put in place, their oil supply in the market has reduced from 1 million barrels per day to just 125,000 barrels per day right now. A huge reduction. So remember, a reduction in oil supply, prices rise. So these are the sort of things that are helping keep oil propped up at the moment. And how does that relate to, if you're not an oil trader, how does that relate to the FX markets? Remember, there's a correlation between oil and CAD, the Canadian dollar. Why? Because a large part of the country of Canada, their foreign exchange sales, a large part of that is in crude oil sales, right? So if crude oil is rising in terms of value, it's going to be great for the Canadian dollar as well, because as I say, a large amount of their foreign exchange sales are done in crude oil. So that's the correlation there. So CAD also, if you look, dollar's been one of the massive outperformers today still. And if you look, in terms of CAD, it's holding up decent ground against the dollar, but it's actually stronger generally across the board. So never forget that, if you don't know, that correlation between oil and CAD, okay? Other than that, guys, all of these themes, we stay on top of them every day, baby. Freaknetwork.io, check out our membership or check out our fundamental course, forexfundamentals.io. Other than that, let's get it.